You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 3rd day of June 2026. Thanks for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. That's reserved for members only and those who are taking their 1-week free trial. This broadcast, on the other hand, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What happens going forward is every trading day, you get an email about an hour before the broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it automatically logs you into our platform. The benefit there is you immediately have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network. Since 2005. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 3,000 daily episodes archived for your educational and viewing pleasure. And if you're new to our neck of the woods, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more, a lot more. And obviously, you're not going to watch them all, nor do you need to. But if you're new, it is a great resource to have at your fingertips because it allows you to see how we've evolved over all these years, day by day by day. youtube.com/CFRN. On the left side of the screen, there's a schedule for each afternoon broadcast. At the top of the hour, 1 p.m. Eastern, Michael will join us for a recap of what happened this morning in the live training room and do a little live trading as time and the markets permit. Right now, we'll start where we do each and every afternoon with our daily devotional. The topic we're on is everyday faith. I think this is the longest time we've spent on one topic ever. I think we're on about day 30, and we've still got a few more days to go. It's that important. Everyday faith. Our scripture today is John 13:1. I'll share it with you from the NIV translation. It was just before the Passover festival. Jesus knew that the hour had come for him to leave this world and go to the Father. Having loved his own who were in the world, he loved them to the end. Again, that's John 13:1. Jesus loved them to the end. He knew Judas would betray him. He knew Peter would deny him. He knew the others would leave. And he washed their feet anyway. This is love formed in God, not in response. Love that depends on appreciation is fragile. Love that depends on loyalty will collapse. The love of Christ endures because it flows from obedience to the Father, not from the behavior of others. He loved them to the end. That is the measure. Scripture says, since God so loved us, we also ought to love one another. If we love one another, God lives in us, and his love is made complete in us. Enduring love is evidence of God's life within. It is not personality, it's not temperament, it is Christ formed in a person. If we withdraw when loving becomes costly, we reveal what truly governs us. Comfort, pride, self-protection. Jesus remained. Love that remains is not loud. It does not announce itself. It simply continues. So where have you quietly withdrawn from someone because loving them became just too difficult? Let's pray. Heavenly Father, teach us the love that endures beyond comfort. Teach us the love that takes us out of our comfort zone. Teach us to love like Jesus did. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Wednesday. Let me give you the numbers from around the world. Then we'll go to the news, then the alerts, then the charts. Starting here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 412 points, almost 1%. NASDAQ is down 225 points, almost 1%. S&P 500 is down 43. And the big one, the Russell 2000, is down 35 points, almost 1.25%. Well, they're all the same color, so And the commodity basket, crude oil is up $2.13, trading 95.89 last. That's a gain of 2.25%. Gold is down $49.60, trading 44.70 last. That's a drop of well over 1%. Silver down $1.90, trading 73.65 last. That's a drop of over 2.5%. In the Asian markets at the close, the Nikkei posted a gain of 1,667 points, 2.5%. Shanghai rose 8. The Hang Seng fell 405, which is a little over 1.5%. And in the European markets at the close, FTSE down 41, the DAX down 312, the CAC down 58. So we had a mixed day in Asia. It was a red day for the UK, and it's definitely a big red Radio Wednesday here in the US of A. Now I'll show you where I think we're heading once we get to the charts, but let's take a peek at the news first. President Trump announced yesterday Bill Pulte. You've probably heard of Pulte Homes, yeah? He will be the new acting director of national intelligence. He will replace Tulsi Gabbard, who steps down June 30th to care for her husband following his cancer diagnosis. So our thoughts and prayers are with that family. Now, Pulte currently leads the Federal Housing Finance Agency, which oversees mortgage giants Fannie Mae and Freddie Mac. He's the grandson of William Pulte, founder of one of America's largest home building companies. The 38-year-old first gained public attention through philanthropic giveaways on social media before Trump appointed him to lead the FHFA last year. Pulte will continue serving in his housing role while acting as the nation's intelligence chief, responsible for coordinating the work of 18 agencies, including the FBI and the CIA. Critics have raised concern about Pulte's lack of experience in national security. As acting director, he can serve for up to 210 days without Senate confirmation. The Director of National Intelligence was created after the September 11 attacks to improve coordination across the intelligence community. And even today, it's still an issue. You know, one hand has no clue what the other's doing. Now, while this position was not officially created until after the 9/11 attacks, the idea itself was first proposed way back in 1955, before I was a gleam in my father's eye. Archaeologists excavating the forecourt of Notre Dame Cathedral have uncovered artifacts dating back roughly 2,000 years to Roman-era Paris. The dig is part of a city project to redesign the plaza in front of the cathedral, following the horrific 2019 fire. When I read that this morning, I couldn't believe that it's been almost 7 years since I sat in my living room watching the cathedral burn. Now, back around 2008, my wife and I were there. We stood in front of it. We walked through it. we went everywhere they would let you go. It is an incredible building. And this fire just absolutely ravaged it. But they've done their best to restore it. And tourists can once again go there. I wish you could have seen it before the fire, but if you have the means and you've never been there, go. Stand. Soak it in. All the history. It's incredible. But back to this archaeological dig, roughly 20 centuries of history are layered within about 13 feet beneath the site. Work on the cathedral began in 1163, and the site was surrounded by tightly packed medieval homes and narrow lanes. Many of the discoveries come from Lutetia, the ancient settlement that later became what we today call Paris. Finds include a 4th century coin bearing the image of Constantine, the Roman emperor who ruled in the early 300s, and fragments of medieval pottery bearing symbols that researchers have yet to identify. The city plans to add 160 trees, improve walkways, and expand shaded areas to better handle the millions of visitors that come each year, while preserving views of the cathedral's facade. I'm telling you, it's incredible. If it's not on your bucket, if you have never been and you got a bucket list, put it on there. It's worth the trip. It really is. In other news, I say in other news. There we go. The Trump administration made what could be the first in a steady drumbeat of tariff news, announcing plans for a 10% tariff on top allies like the European Union and Canada, and a 12.5% rate on other nations, including China. The release from Trump's trade representative last evening said that 59 countries and the 27 member states of the EU had failed to counteract goods being made with forced labor, and that the practice burdens or restricts U.S. commerce, and is therefore ripe for action later this summer under Section 301 of the Trade Act of 1974. The reaction, of course, was immediate, with the EU calling the move unjustified. On Monday, the Trump administration announced a 25% tariff on Brazil, levied under the same authority. This week's announcements could be just the beginning, as other Section 301 investigations are ongoing, most notably one focused on excess structural capacity that also includes many major trading partners. Another is focused on Vietnam. Both are scheduled to conclude in the weeks ahead. And you know, Trump's talking about replacing the IRS with tariffs. That's how our country was run back in the day, prior to the Great Depression. No taxes, no income tax. San Francisco homebuyers may have officially lost their minds. It was late January when Bill Law realized something had shifted in San Francisco's real estate market. That month, the longtime tech worker and his wife submitted an offer on a $1.3 million home in the Sunset District. It's a West Side neighborhood that boasts good schools and easy access to both the ocean and Golden Gate Park. Hoping to stand out from the house hunting scrum, the couple offered $300,000 above the asking price. They didn't come close. The winning bid of $1.86 million easily eclipsed their offer. So a home selling for $1.3 million, when the gavel came down, sold for $1.86 million. Over $500,000 above the asking price. I definitely feel the frustration in the real estate market. Law tells me since January, it just took off like a rocket. $500,000 may sound like a stunning sum for a bidding war, unless you've paid any attention to San Francisco's housing market over the past 6 months. In a city long on AI and chronically short on housing, some homes now trade for millions of dollars above their asking prices. Once underrated neighborhoods like the Outer Sunset and Outer Parkside now provide fog-soaked backdrops for truly unhinged pricing contests. No major city has seen home values rise faster over the past year, helping the San Francisco Metro reclaim its title as the most expensive housing market in the country. The city by the bay has seen many a boom and bust cycle, but seasoned San Franciscans will tell you this one feels different. Recency bias? Maybe. The current AI-fueled bonanza, though, is notable for both its concentration of extreme wealth and the speed with which it's minting new fortunes. With a wave of IPOs looming, including OpenAI, SpaceX, and Anthropic, overnight millionaires and billionaires are poised to deliver more shocks in the coming months. It's a head-spinning turnaround from the last time San Francisco real estate drew national headlines. In the depths of the housing slowdown in 2022 and 23, Bay Area homes were caught in the dreaded doom loop as newly mobile white-collar workers fled to home offices in cheaper cities like Austin or Denver. Census Bureau data shows the city's population shrank by more than 60,000 people. It's tempting to write off San Francisco's comeback as an AI-fueled anomaly, an extreme case divorced from most Americans' reality. The city may stand alone in many respects, but the experience of buyers and sellers there also offers a neat encapsulation of the forces shaping the whole of America's real estate market. The K-shaped economy. Employers return to the office push, home building hurdles, and of course, the AI bubble, or maybe not a bubble. We don't know yet. San Francisco's boom loop is just getting started, and a version of it may soon be coming to a city near you. You got a home, hang on to it, because I think they're about to start raising interest rates again. Hate to say that, but kind of seems like the writing's on the wall. Yeah, I know Trump got his man in as a Fed head, but let's not forget that Jerome Powell was also appointed by Trump. So while we're talking about happy things, let's talk about how the latest S&P 500 surge is like the setup to the Black Monday stock crash. If there is one constant amid this AI-fueled, record-setting run for the stock market, it's the debate over whether it's all just one big bubble. I don't think it's a mania. Taxi drivers are not talking to me about AI server orders or GPUs yet. It hasn't happened yet, so we're not in the full mania phase yet. according to EMJ Capital founder and veteran tech investor Eric Jackson. People are buckling in, he added. They are spending real dollars, unlike the dot-com period. And this thing, AI, it's real. So there's more to come. But of course, others naturally disagree. Deutsche Bank strategist Jim Reed published a chart that continues to attract a feverish number of replies as it draws attention to Black Monday. Black Monday, of course, refers to the October 19th, 1987 single worst day in stock market history by percentage decline. The Dow Jones Industrial Average crashed a staggering 22.6% in a single trading session. The sell-off was global, instantaneous, and devastating, wiping out hundreds of billions of dollars in market value as panic spread from Hong Kong to London to New York. It was fueled by a toxic combination of rising interest rates, trade deficit fears, overvalued markets, and the relatively new phenomenon of computerized program trading that accelerated the selling. Now, Ma and Pa Kettle didn't yet have computers in their kitchen. By no means, Reed says, are we saying there's a stock market crash coming. I am. The economy is growing strongly, and corporate earnings have remained impressive. Market-leading stocks such as Nvidia and Apple aren't trading at insane historical valuations, at least based on Yahoo Finance's Alpha Space research. If you haven't checked out Alpha Space, check it out. It was created by Yahoo Finance, and you can take a free trial. Reed continues, what we're doing here is serving up a reminder that the market is nearing priced for perfection levels. With that, there are certain expectations that have to be met or the market will adjust. Now, I mentioned this yesterday. 50% of the value of the S&P 500, which is 500 large cap companies, 50% of the value is on the shoulders of 41 companies. You don't have to be a rocket scientist or a math genius to realize something's not right with that picture. Turning from Wall Street to the world at large, after a 2-decade rise, public support for LGBTQ issues is dropping, according to Gallup's annual Values and Beliefs survey published today. Support for same-sex marriage, the morality of gay and lesbian relationships, and endorsement of gender change are all down from their early 2020 highs. The change has come as conservative leaders have pushed back against diversity, equity, and inclusion programs that were intended to foster greater acceptance of LGBTQ plus people and other historically disadvantaged groups. Now, this is from the Gallup poll. Okay, the Gallup poll is one you can put a little trust in, I think. Been around a long time. And they are bipartisan. The Values and Beliefs survey, conducted May 1st through 17th of this year, is based on telephone interviews with a random sample of 1,001 adults. While 65% still agree that same-sex marriages should be valid, that's a 6-point drop from its peak in 2022 to 2023. Personally, what people do in the privacy of their own homes, the privacy of their own lives, that doesn't matter to me. that's between them and God. Now, I certainly don't qualify to sit in the judgment seat for anyone on anything. Gallup states also that between 1996 and 2022, the percentage of U.S. adults in favor of legalizing same-sex marriage increased by 44 points, from 27% to 71%. In 2024, the figure dropped to 69% and has shown a marginal decline each year since. 62% of those surveyed now believe gay or lesbian relationships are morally acceptable. That's the lowest support for the statement since 2016. Gallup first asked about the morality of same-sex relations in 2001, when 40% said they were morally acceptable. By 2022, the level of support had risen to 71%, before a sharp drop to 64% in 2023. The support has held at roughly that level for the past 3 years. Among the issues listed in the survey, gender transitioning saw the single largest decline. Only 38% agree that changing one's gender is morally acceptable. That's an 8-point fall in 5 years. When Gallup first asked about changing one's gender in 2021, 46% found it morally acceptable and 51% found it morally wrong. Today, those numbers stand at 38 and 57% respectively. Now, according to Gallup, the downturn in support for LGBTQ issues is partisan, with a dramatic fall among Republicans and, to a lesser extent, independents. However, Democrat support has remained stable. No surprise. Republican support for same-sex marriage plummeted from 55% in 2022 to 37% today. Independent support for same-sex marriage has dropped 6 points to 67%, while Democrat support remains an overwhelming 87%. It's the same story for gay and lesbian relationships. Since 2022, the share of Republicans saying such relationships are morally acceptable has nosedived 21 points to 35%. This is roughly where support was between 2005 and 2014. So, if you got a life, just go live it. And last on the news front, Texas helping the Trump administration keep non-English speakers from driving commercial vehicles with new standards. The Texas Department of Public Safety will give commercial driver's licenses, CDLs, knowledge tests only in English, while banning interpreters. Well, let's face it, when you're out on the road, you're not going to have the interpreter with you. Now, this is effective immediately. The new policy aligns with that of President Trump's Department of Transportation to ensure that all newly licensed commercial drivers have the communication skills necessary to operate these vehicles safely on Texas roads. This should just be rolled out nationally. This should not be a Texas issue. This should be an America issue. I mean, we've all seen the news. We know of the horrific accidents. I mean, when you got an 18-wheeler barreling down the freeway at 75 miles an hour, that's a weapon. And when the guy behind the wheel can't read or understand the signage, well, that's just a disaster waiting to happen. And we've seen it happen more than a few times. Who in their right mind ever thought we should give someone not just a CDL, but a regular driver's license to someone who doesn't know that stop means stop, or no U-turn means no U-turn? I know we have the international symbols, but apparently they don't translate. So anyway, here we are. It's another day. All right, Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis. It's also crude, gold, and silver. We're currently in week 409. Over the last 409 weeks, we have issued over 22,400 individual handcrafted alerts, and what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based simply on market structure and a simple process we teach all of our passport holders. So far this week, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 40 logic alerts. When Valerie did the recap this morning at 7 a.m. Eastern, we were still waiting on the outcome of 10. That gave us 30 actionable alerts. We've had 2 stop outs so far this week, so that means 7% of the actionable alerts were stopped out, based simply on market structure. The very simple process we teach all of our passport holders. The purpose of the logic alerts is to help you learn to read the chart. Because once you learn to read the chart, then you don't need the alerts. You don't want to be dependent on somebody else to tell you when to get in and when to get out for the rest of your life. What happens when that person, when that goose laying the golden egg, decides they don't want to play anymore? Huh? What are you going to do then? You gotta take the reins. You got to learn how to do this. You need to be able to look at a chart and see where potential resistance is and where potential support is. If you do that, you'll find the windows of opportunity where you find your best high probability, low risk trade opportunities. Every logic alert has an entry price, long or short, an initial target that's designed to help you get your goal for the day. In most cases, additional targets, and then a final trade to target. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. If you never actually trade a logic alert, you can still use them for the purpose intended, and that's to help you learn to read the chart. If you look at a chart and see chaos, okay, you just need to learn to read the chart. That's all. If you handed me a newspaper written in Japanese, well, even though I lived in Japan for 17 months as a young man, I would just see chaos and confusion. It would make no sense to me whatsoever. If I learned Japanese, well, then it would make perfect sense, right? Well, a chart doesn't have any words, so it's not about learning that kind of a language. It's about learning a nonverbal language. Use them for the purpose intended. You'll thank me later. Now, 409 weeks is a very long time, over 7.5 years. But many, many years before Logic 247, we had our original alert service, the concierge trade alerts. And they're different in a lot of different ways. But for the purpose of this discussion, I'll just say this. They don't come out around the clock. They typically come out 5 minutes ahead of the Globex open, as they did Monday night for the Tuesday session, which began Monday night at 6 p.m. Eastern. Last night I was running late, and I let everybody know in the discussion group I'm running late. So it was 7 minutes after the open last night that these targets were published. The S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. Now, as we go through the individual markets, you'll see these targets drawn out on the chart. Just remember, 7 minutes after the open is when the CTAs went out last night. They typically go out 5 minutes before the market opens. So, with that said, let's just go look at the charts. See what's going on. We'll start where we always do with the bellwether, the S&P 500 E-mini futures. Now, I mentioned yesterday that the black step line was once again crossing blue and climbing. Okay, we had a head fake here. You see, when the black step line crosses from the left side to the right side of blue and climbing, that typically leads to a retracement to the BBC. Price always reverts to the mean. I don't care what you trade or how you trade it, price reverts to the mean, period. Full stop. It's like gravity. You don't have any choice. It's just what happens. But this was a head fake. The step line clearly crossed. We did not get a retracement to the BBC. Then price got back on the left side, which makes this right here a very important price, very important area. You should probably write it down, 7,300. Then you can see what happened here. We got another cross. Price still didn't pull back. So once, twice, third time. Now, in all the years we've been doing this, I've never seen this before. Okay? So we're coming down hard today. Now you see the low of this day right here, May 28th. That low aligns perfectly with where the step line that should have led to the BBC, without doing so, crossed back to the left side of blue and climbing. That is a really important price, important area. Now, you could call it 7,500, or you could look at the low of this day, May 28th, and you could call it 7,506. So let's just call it 7,500 to 7,506. That is potentially good support. Here, let's do it this way. Right there. Can we get a straight line? Yeah, it's pretty straight. And we'll call that potential support, or probable. Poyeminal? So better go back to school. Potential support. Now, for two reasons. But it really, I guess it's the same reason. Because this low where we found support, that aligned with that spot. So we're really talking about the same thing, okay? Price came down to that spot and found support. So when it comes down again, I expect it to find support again. If we don't just make a fast drop over the next day or two, if we consolidate a little bit sideways, then the BBC is going to rise. And then you'll have three reasons for potential support at that area, okay? Now there's the last all-time historic high put in on Monday. We had one on Thursday, a new all-time high on Friday, a new all-time high on Monday. But yesterday, we missed the all-time high by 1 tick. It would have taken 2 more ticks to put in a new all-time high. And today's high is 76.28.5, and the low so far is 62.5, 75.62.5. So that's a good drop. Now, all of the alerts, the logic alerts, the concierge trade alerts, they're all created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. They say if it's not broke, leave it alone. So I have. Now the vertical lines separate today Wednesday, here's Tuesday, here's Monday. The horizontal lines are the weekly trading zones. Publish the zones every Monday for over 16 years. They come out Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. When price drops to a zone, we expect support. When price rallies up to a zone, we expect resistance until proven otherwise. When price encounters a weekly zone, only one of 3 things happens. 70% of the time, it's consolidation. It can look like that. It can look like that. It can look like that. 20% of the time is rejection. That's where price touches a zone and gets rejected and runs the other way. And 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there. When that happens, price will typically retrace back to the zone it sliced through and then continue in the direction of the slice. Now, this is an example of a slice, right? And it did retrace back to the zone it sliced through. And for a minute, it did continue in the direction of the slice, but it never took out that low. Or maybe it did by a tick. So that's what you should expect on the slice. All right, so on the ES, this was the opening candle last night. We opened right at the weekly trading zone, 76.27/28. And by the 7 o'clock Eastern, 7 to 7:30, 30-minute candle, we dropped down and hit the short target. We spiked the zone to do it. Now, that short target is based off this right here. The bullish cross. That's when the blue line gets above the green line. Well, it was red, turned to blue. Bullish cross. Blue line gets above the green line, leads to an extended move. The first time price revisits that area will almost always be good support. And it was. It sent price all the way back up through the BBC to the zone overhead, where we consolidated quietly most of the evening until London opened, and then things got a little rough. We hit the short target, and we traded through it, and we traded through the zone. Now, here's an example of a slice. We sliced all the way through this zone, and then at this zone, price got rejected, and it sent price back to the zone it sliced through, and then price continued in the direction of the slice. Now, the black step line and red and falling have gotten very close together, but the step line has not crossed red and falling. If the step line crosses red and falling, then you should expect a retracement back to the BBC. Price always reverts to the mean, and the pullback holds more often than it doesn't. Like this pullback held even though we spiked it. This pullback held even though we spiked it, because both candles are still touching the green line, the BBC. It just stands for bull-bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. And again, when price runs up to a weekly zone, we expect resistance till proven otherwise. And when price drops to a zone, we expect support until proven otherwise. Now right here, we got consolidation, and then price reverted to the mean, and down we go to the next zone. 2 zones. And then a retracement back to the zone, and then it's just how price moves from zone to zone to zone. Okay? On the Dow. Here's where we opened last night. We got a drop to the BBC, the pullback held. See, we had this big leg going into the close yesterday. And price always reverts to the mean. To the tick, as they say. Support always sends the market looking for resistance, which it found at the weekly zone. Resistance always sends the market looking for support, which it found at the zone. Support sent us to resistance. In other words, you had a leg and a retracement, the pullback held. Then you had a leg and a retracement, and the pullback held. Yeah, we spiked the BBC a little bit, but that candle's touching it, and look where we closed, way down here. So we've definitely hit the short target, which was based off this bullish cross from yesterday. Okay, so the first candle down right there held as good support. Okay, it sent price back up into potential resistance at the black step line, and then that drove price further down. And so far, the low of the session on the Dow, I don't think we're there yet. Okay, this was yesterday's low, and we just need to take out this low, and then hopefully this low will hold, because if it doesn't, then we got to look further left for support here. And then after that, it's all about the zone. On the Russell, here's where we opened. So we had a leg and a retracement. Pullback held. We did spike the BBC to the zone, which again, when price rallies up to a zone, look for resistance, like that. And when it drops to a zone, look for support, like that. So the pullback held. And here's where trouble started. Okay. So we had a leg, a retracement. Now, for the trend to continue, we needed to put in a higher high. We didn't. In fact, price didn't even make it up. It came just shy of hitting this area right here, where red turned to blue. So that's a sign of weakness. It's a sign the trend may be coming to an end. See, I have a leg and a retracement, and a leg and a retracement, leg and a retracement. So you got a high, you got a higher high, you got a higher high, you got a higher high. It's the definition of a trend. So once we get below the BBC, now we're looking for lower prices. But we did consolidate at the zone. The pullback to the BBC held there and there. Sent us down through the short target, which was based off this area right here. So where the black step line crossed red and falling, turning it to blue and climbing. And we just plowed right through that thing. Now, if we'd been watching it live in real time, we might have seen it bounce a little bit, but whew, where we actually found support was below this area here. go back and look at Monday. Oh, we're just looking. Okay, Wednesday, Tuesday, Monday. So it looks like we're headed for the low of the week, which was put in on Monday for the Russell. Because we've already blown past this. All that's left really of the downside is this. We'll probably see it before this broadcast ends, I would think. On the NQ. Leg and a retracement, pullback held. A leg, we ran into the zone resistance. That sent us back to the BBC support. That sent us above the zone, going into the close. So leg and a retracement, the pullback held. And then we consolidated for hours, right at that zone. And then we almost made it to the long target on that candle. First, we had to flush everything out. That's the 9:30 opening candle, where we came down and hit the short target and then closed that 30-minute period right at the short target, which is right there where the black step line crossed blue and climbing. Right there. See it? That's where that first low came in last night. And we hit it again. Bounced us up to the BBC and the zone. The pullback held. That's a resistance times 2. And now we're back down to the short target. Now we've spiked this zone, but so far the market has managed to hold itself up. If we take out this little double bottom here, and looks like the next spot we're headed for is right here. So we're talking about 470 down to 440. It's 30 points, $20 a point, $600 per contract traded. Now we're printing a green candle, but we got potential resistance here, here, and here. So for that window of opportunity to truly become an opportunity, we got to take out this low right here. Crude got back above the highest weekly trading zone. Now we hit the highest weekly trading zone on Monday, which is really unusual. We have a standing rule that says if we hit the highest or lowest weekly trading zone by Tuesday morning, that by close of business on Friday, price will probably be at the other end of the spectrum. So since we hit it on Monday, we're expecting by close of business on Friday that we'd be down in this area. One thing that makes this a little different is the fundamentals here are so big with Iran and the Strait of Hormuz, but we're technical traders, so we stick by our technicals no matter what's happening fundamentally. And by close of business Friday, we very well could be back down in this area. That is the lowest weekly zone this week for crude. But we're definitely above it right now. We're above the BBC. We got blue and climbing below us, but we're printing a red candle. So this pullback right here is important. Does it hold? If it does, we get another leg to the upside. If it doesn't hold, then the top side of that long target and the zone could all be good support. but it's conceivable. Yeah, see, we just opened a new candle and we got more blue and climbing. That means Michael should be here any second. Here's gold. Now, yesterday I drew in this window of opportunity. It filled partially yesterday afternoon, and then it filled last night once, twice.
Wait a
We
minute.
found support at the zone. Yep.
Oh, okay. I thought you were calling my name.
No.
Sorry. Okay.
So from the zone, we bounced up to the BBC, and the pullback held. It held, and it held, and it held, and it held, and it held. And then we hit the zone, and it held, and now we're consolidating at the zone. So Michael's going to give us a recap of what happened this morning in the live training room and do a little live trading as time and the markets permit. And then I'll come back. We'll take a look at the final market silver, and we'll wrap it up with our good word for today.
All right. Let me get this ready over here, and we're ready to go. Okay. There.
All right.
Should be
Looks good.
Great. All right. Here we go. Good afternoon, everyone. Today is Wednesday, the 3rd day of June, 2026. Now, if you have not taken a free trial with us and you want to take a free trial with us, well, then just go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Just click on that purple button and it will bring you to this page. Yes, this page. On this page, all that we ask for is you name your email and phone number, and down at the bottom, we'll give us your TradingView login ID. Okay, once you give us that TradingView login ID, we know that you took the trial, and we can get all your indicators indicating on your desktop for you. Okay. Okay. Recaps. We had a good day again today. I was thankful that we had a fair number of trades today. So 30 trades, twice what we had yesterday. So that was good. And they were pretty consistent across the whole session. It slowed down a little bit toward the end, but most of it was still some pretty good trades. Anyway, we were up 184 ticks on the NQ, 20 ticks on the Russell, 49 on the YM, and 8 on the ES. That put us at $1,365 per contract on the morning session. Today, it took 12 minutes and 2 trades to get to $1,200, and we took a total of 30 trades with 3 stop outs today, putting us at 90% of our trades are break even or better. So on the month now, we're at $3,345 over 3 trading days, averaging $1,115 per contract per 2-hour trading day. And on the year now, we're at $97,965 over 92 trading days, averaging $1,064 per contract per 2-hour trading day. Now, if you were to quit trading when you get the goal for the day and add 1 contract per month, now you'd be in your 6th contract. We're in June, the 6th month, you'd be in your 6th contract. And if you did everything exactly like I did and had the same slippage and everything else, you would have only had to work 14.13 hours so far this year getting your goal. And you would be up $43,742.50. That's gross. All right. That's pretty good money. It's average of $3,094 per hour. $3,094 per hour. All right. Now, well, that's it. Let's get into the trades. All right. We'll start off with the Russell. We only had a couple of trades on the Russell. And they were both worth 10 ticks. The first one was a 10-tick trade, and the second one was a 10-tick trade. That was all we had. Now, during the break, it looks like there was a trade right there, which was good. A trade, nope, that wasn't. A trade right there, which was good. And that was it. So 2 more trades on the Russell during the break. Okay, and the YM, we had a few trades. Well, you got them all right here. 2, 4, 5. I think there's 1 more. All right, well, on the YM, we started off with plus 10. Then we had a 17. That got us up to 27. Then we went to 47. So we had a 20. That got us to 47. And then we went from 47 to 63. And then we stopped out back down to 38. And then went from 38 to 49 right there. So that was an 11-take trade right there. And during the break, there was nothing there, nothing there, nothing there. Right here was one long trade right there that worked out okay. It's pretty tight range in here right now. So nothing else happened since that one right there. And that was the YM. Right, and the ES we only have a few trades on too. I guess it seemed like we had a lot more trades. I guess they were all on the NQ. Yeah, they were 18 more on the NQ. This is the whole ES right here. We had a break even. Then we had, hey, there's something missing here. We had a break even, then we had a +8 to get us to 8, and I didn't add whatever that was. It probably wasn't very much. And then we had another break even right here. So we ended up with +8 is what I wrote down. Now during the break, it looks like this was a trade right here. That would even a little bit. That was a trade right there. That would have been okay. That would have been a good trade. That was a trade that would have been okay. That was not because it didn't go full cycle right here. That was a trade that would have been probably a break even for me. Coming all the way over here, it just kept going down, 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 right? And you get all the way over here to the very end. And I don't know if that actually made it up to the mid-band. Looks like it did. Nah, it didn't quite make it. It was one tick away right there. And that was it. We ended up with just 8 ticks on ES. Now, the majority of our trades today were on this guy, on the NQ. Okay, and let's see. Go all the way back here. Here we are. Okay, so our first trade on the NQ was 10 ticks. Then the next one was 14 to get us to 24. Then we stopped out. No, I'm sorry, we got up to 34. We had another one that got us up to 34. And then we stopped out when we were at -2. And then we went from -2 to +8. And then we went to 58. And then from 58 to 71, 71 to 82. 82, this one was messed up. I went from 82 to 92, but this one didn't actually hit the mid-band right there. That's why it's got a different color. And from 92, we went to 102, and from 102, we went to 152. And this one, it didn't have a flat spot before it. I went from 152 to 160 right there. And then we stopped out. That brought us down to 124. And then we went from 124 up to 162. Sorry. Yeah, 162 right there. And that one's highlighted because it didn't actually hit the mid-band. I thought it did. And then went from 162 up to 170 and 170 up to 174. This one is highlighted. Why is that one highlighted? Oh, because it was a really deep pullback. And it should give me, I got in on the pullback down here. It should give me 10 ticks in profit, but it only gave me 4. And I have 2 more here that I only have one of those accounted for. 174 to 184 is what I said we stopped at. And there must have been one more there, probably another 10 ticks. And that was all of that. I did have 184, right? Yeah, I did. Okay, and that was all that we did with the NQ this morning. So the majority of the trades were on the NQ. We have one right now. If we get a down close on this bar, we'll have another trade right here on the NQ. Just looking for my DOM, trying to find it. Okay, so it's 10 points off the top of the bar. Now the high is at 79.25, so you'd be selling 69.25. 69.25, as long as the high stays in the same place and the high's going up. So the high is now at 81.50, so it would be 71.50. Okay, high is at 82.25. Now it's nothing. It's nothing. Let me just cancel that order. Sorry, I was trying to keep up with it and get my order in place, but it changed. It should have flipped the YVR right there. It didn't actually hit it. If it would have hit it, it would have flipped it. But you ended up with no trade right there. All right. So that was it. Well, we have 21 minutes left to trade. This is 20 minutes. We'll just say it's 20 minutes. Okay, so when we get to this part is when we start adding stuff down here at the bottom. Now, we didn't have any trades yesterday. Today, it's day number 103 and it's 6-3. Okay, so I just have a feeling I'm going to end up with something today. So let's paste that there. Paste that there, and we'll move this up to 102. All right, we'll get in here and get ready to trade. If anybody has any questions, now is the time to ask. Okay, we almost flipped the YBR right there. It came really close. It just has to touch it and it'll flip it. Right, and so I have okay. So let me move that in there. We need to hit the mid band here and get an up close. We're in the oversold already, so that's what we need to do there. Here we're pretty close to a trade on the YM. The Russell, I think, if we go up enough here to hit the mid band, we're probably gonna hit the YBR and it's gonna flip. Now the NQ should have flipped too, right there. It came really close. I don't like trading when it comes so close to flipping it, and it doesn't. Kind of throws me. Okay, so this down close right here did not put us into the oversold. I was thinking it was going to. So now we need another down close to get us into the oversold and hit the mid band on the YM. Okay, we need down close on both of those. Let's see which one this is. And this one and this one. Okay, this one. All right, we're at the mid band on the ES. We need our down close here. We just need an up close on the ES now, but the ES is looking like it's going to keep moving down and hit the YBR. So the low on this is 71.50. So we're buying 73.50 right now on the ES. Okay, buying 73.50. This is what it looks like. Okay, and on the YM, oops, can't see the low on that one. On the YM, the low is at 26. So as long as that, yeah, okay, so you're buying 46 on the YM. And that looks like this. And we're going to cancel this one because that just closed down. And we're going to cancel this one because that's too far away. All right, so now they're going to flip down, probably. Yep, they both just flipped. So now everything's in the red, in spite of that coming so close and that one coming so close. Everything is in the red right now. So it is, here it is. All right, well, we don't have anything here yet. Okay, nothing yet. So now we wait. We have 15 minutes left to try to get some action in here. We haven't had a trade yet, so 15 minutes left. Hopefully we'll get something in here. I expect we probably will. If we save this and look at the bigger picture, this is definitely a bigger candle than we had yesterday. And we were talking about it getting all the way down here, all the way down there. If that happens, then, well, it's got a long way down to get there. And that could be over a couple of days' time. But that is pretty much that. We did not flip the YBR there. It looks like it's going to make another shot at it. Now they're all in the red. They all need to pull back and hit the mid band. Nothing is in the overbought yet. So an up close on this one on the S is going to put this in the overbought. And up close on this one on the Y is going to put that in the overbought. Oh, it didn't. Look at that. The up close didn't put it in the overbought. That's odd. That is odd. We didn't have any wacky prints like we did yesterday, did we? No, I don't see any. None within range, anyway. Nothing. Nothing there. I don't even have the question box open. Sorry. Anybody else any questions? Okay, no questions. Right. So where should we be going here? It's just drifting lower. No pullbacks that we could use anyway. The YM's pretty close. If we get an up close here on the Russell, an up close on the Russell, it'll bring it into the overbought. It should bring it into the overbought. And then we might have a trade there. It might flatten out the mid band. Okay. But other than that, we have 10 minutes left. We don't have a single trade yet. I really thought we were going to get at least one trade in this session. So we're overbought on the NQ, but we're nowhere near the mid band. So what's likely to happen now, before we hit the mid band, we're going to have a down close. It's going to pull us out of the overbought. It's going to reset the mid band. Here we are on the Russell. This could be our first trade. It's going to high 93.4. So you would sell 91.4. Like this. Okay. All right, the YM right now is hitting the mid band and until we're bought, so it just needs a down close. It's got a high of 34. So on that one, you'd be selling 14. Like this. And we could turn out with trades over here too on these guys. I don't think we're going to, but we could. And these are the closest things we have right now to trades. So go to high, well, that's 0.5 now, so that needs to go up to 0.5. And this one's got a high of 0.6, that needs to go up to 16. Reset the mid band. Okay, we're almost there on the Russell. This is not a trade over here. It's not a trade here. They need to go all the way down and come all the way back up now. And we're in the Russell. First trade. That's going to go down here to bump the stop to +5. And make sure the top is, yeah, still the same place. Right there. It should go through that down to this level right here. Then all the way down here to 9.6. There it goes. That's +5. It should keep going down all the way to 9.6. All right, well, we're out with +5 on the first trade. We're almost in the second trade. The ES is a ways away. That kind of messed up the NQ. It pulled back too deep, and a down close right now won't work. It's not flat. All right. Any questions, anybody, about anything? Nothing there, nothing there, there. And there it is on the YM. Okay, so that needs to go down to 12 to bump the stop. Had a little bit of a gap right there.
Well, finally, that took a while.
Yeah, it did. They're all taking a while. I got one on the Russell for 5 ticks, and this should go all the way down here. All the way down there is where it should go. That would be 22 ticks if it went down there. But let's see what it does. This looks like it's going to go up and hit the YVR. This looks like it's not going to give us anything. So I was almost excited when we had 20 minutes. I had 20 minutes in one trade.
Yeah.
And now we're on our second trade now. So 20 minutes in 2 trades. They'll get there. We'll see. Hopefully. It's like everybody is just waiting for something to happen. It was pretty active this morning, though. I mean, we had 30 trades this morning, which is good. And I missed probably 8 or 10, I imagine. A down close of this bar on the YM is important. Okay, and it currently has a high of 29, so it's got to get down to 9. Should be right there. Give us a down close. That would be enough to get the stop to +5, but I think it wants to go further than that. The swing low is down here at 96. If it only made it halfway to the swing low, it would make it here to 911, roughly. Because when it turns around, that's what it does. It goes halfway down the prior swing low, usually like that. And that should be enough to get our stop to positive anyway. Bump our stop to +5. It's just gonna get right there. But we'll see. The NQ just flipped the YBR up. So we will see.
A lot of analysts are saying that current market conditions look an awful lot like they did right before Black Monday, where the Dow lost 22%, a little over 22% of its value in one day.
In one day. Ouch.
And a lot of that was because they had just brought computer-generated trading online, where it became a cascading effect.
Yeah.
Those early algorithms were pretty basic. If price drops this much, so
that's what they were written in, basic.
yeah. Interestingly enough.
That was like in 1987, wasn't it? Something like that.
Yeah.
Can't remember. I had just gone to Idaho when I was in the Air Force.
Yeah, Michael R. Black Monday, 1987.
1987, yeah. I had just gone to Idaho, and the guy in charge of my group within the squadron lost like his whole 401k. Well, they didn't really have 401ks back then, but he lost like his whole retirement account.
Since World War II, the only other time the S&P 500 has risen this rapidly, except after a recession, was months before a huge market crash. So will 99 turn into 2000 or 87?
Should get all the way down here. We're at +6 on this right now.
It was October 19th of 1987.
October.
The sell-off was global, instantaneous, and devastating, wiping out hundreds of billions of dollars in market value. As panic spread from Hong Kong to London to New York, it was fueled by a toxic combination of rising interest rates, trade deficit fears, overvalued markets, and the relatively new phenomenon of computerized program trading that accelerated the selling.
Did not have any stop gaps, any limits,
any curbs. Yeah, right.
That was a long time ago. Well, we just about run out of time, but we had 2 trades and we got 15 ticks overall, so that was pretty good. It's quiet as it was. Here, I'll enter those in. One was on the Russell. We had 5 ticks on the Russell, and we had 10 ticks on the YM. So in this session, we're up. We had 2 and 0, and this was actually 20 minutes today. So we had 2 trades in the session. 100% of them were break even or better. They're up $750 with 10 contracts, or 75 with 1, and 5 ticks on the Russell and 10 ticks on the YM is what we ended up with in this session. So in all the sessions that we've been keeping track of here on Wednesdays, on every day, in the afternoon sessions, 102 of them were averaging $110 per contract in the 16.79 minutes that we have in trading time. if you have not taken a free trial with us, go here at mytradingiq.com, click on the purple button. There's no credit card required for this. I'll bring you to the registration page right here. On this page, all we ask for is your name, your email, and your phone number. And down at the bottom, give us your TradingView login ID so we can get your indicators indicating for you on your desktop, so you can follow along with us live in the room in the morning. All right, and that is it. We did make it down there. That number that I pointed out in the YM, that big one that was down here at 96, went right through it. All right. That is it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Yes, sir. Recap of the morning session.
Today, it took 12 minutes and 2 trades to get to $1,200. 10 contracts on.
Good job.
Thank you very much.
All right, guys, I have gone through every one of the markets in granular fashion except silver. And we're consolidating. Barely, we're just trying to hang on at this zone. We got one more zone down below, down at 70.36. We're consolidating here for hours. Here's where we opened last night. And then the window of opportunity that I drew in live on yesterday's broadcast, it filled on the third 30-minute candle after the open last night. And then when the market found support based off this low right here, pull back to the BBC and the zone held, and then we fill that window of opportunity a second time, and it ultimately filled a third time, which is not uncommon. Once a window of opportunity fills, it will quite often fill a second time. But support at the zone, resistance at the zone, support at the zone, resistance at the zone. And then once we finally broke through that zone, then we had resistance at the zone and support at the zone. Now the black step line is attempting to cross red and falling. If it does, we should get a retracement back to the BBC. Keeping in mind that since we had this bearish cross way up here, which is what the long target was based off of, this bearish cross from yesterday, first pullback held, second pullback held, the third pullback held, the fourth pullback held, the fifth pullback held, the sixth pullback held. Will number 7? Well, we'll see. We know that eventually it will trade through, but you never know which one. You got to be patient and wait. But nice to see that fill so cleanly. Remember, with silver, you only need 2 pennies to get your goal for the day. Now we are slightly off the low of the session. I drew in that potential support right there. That is based off the low of May 28th, and that low was created right here where the black step line went from the right side of balloon climbing back to the left side, which is an unusual thing. We've seen 1 head fake, 2 head fakes. We don't know if this is another head fake or not. The last time it crossed before this one, I mean, it looked like it was heading for the BBC, and then apparently some news came out. Trump posted something. Something happened, and we got a leg and a retracement, and that area was good support. So we expect it to be good support again until proven otherwise. Now, it may be support that leads to just a bounce, maybe a full-on reversal. If we spend a couple days getting to that area, and the BBC is going to rise to meet price, which creates a different dynamic than when price drops to the BBC. So we've covered all the markets already. When I sign off here in a few minutes, you can go to youtube.com/CFRN. You can watch all of today's broadcast or any part of it. youtube.com/CFRN, and just make sure you click the live tab. So we opened last night on the ES right at the zone, and then From 7 to 7:30, we dropped all the way to the short target, to the tick. That was based off the bullish cross right there from yesterday. It sent us back up to the zone, resistance, and we found support at this zone, resistance at the step line, and we've been consolidating now for a few hours at this zone on the ES. So on the Dow, we hit the short target. On the Russell, we've hit the short target. On the NQ, we hit the long target and the short target. We're sitting right on top of the short target. Now, I just drew in this window today, so we'll see what happens. If we were going to draw a long window to correspond with that, it would be right there. So no matter which way price ultimately goes, you have an opportunity. This one is obviously a much bigger one. And this one, we could probably open that up a little bit, but not too much. Yeah, it's pretty tight. 3076. Call it 30762. So that would be 40 points, $20 a point. Yeah. Crude, again, is above the highest weekly trading zone and looking to go higher. Now it's got potential resistance here. Right there where blue turned to red. That's where this high came in. So we either get a double top here or we break it and head for the high of the week. That is the high of the week right there, and that is the highest weekly trading zone. Now today's Wednesday, here's Tuesday. Notice as price dropped, we found support right at the zone. But Monday, we got above the highest weekly zone. That doesn't mean that by the close of business on Friday that we won't be closer to the other end of the spectrum. It is certainly possible. So it's a bearish day on Wall Street. To become a member, get a hold of Valerie. Just let her know that you're interested in becoming a member. She will send you all the information you need to make a well-informed, intelligent decision as to whether or not what we do is right for you. You can call her at 949-42-EMINI. You can email her, support@cfrn.net. She will email you again everything you need. Once you make your decision and become a member, you get 2 hours of live training every trading day. On top of that, private one-on-one mentoring. All you got to do is ask, no extra charge. The strategy you learn, the indicators you use as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you get the Logic 247 alerts, which will help you learn to read the chart. You get the concierge trade alerts every evening, 5 minutes ahead of the Globex Open. Every Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. Every Thursday night, you're able to attend the members-only workshop. And you get the golden keys that open all the private channels for you in Telegram. And there's quite a few. Everything a trader needs, all under one roof, one low price. Let's wrap it up with our good word for today. Now, we all know the story of Jericho, where the walls came tumbling down. So, how to conquer your Jericho, and we all have one, part 1. Joshua 4:7, these stones shall be for a memorial to Israel forever. Jericho was the strongest city in the Promised Land, and the first Joshua's army had to conquer. You could say it represents the biggest challenge that you are facing right now, whatever it is, because the towering walls of Jericho looked impregnable. It would have been intimidating to any would-be invader. So God told his people to remember and record what he'd done for them in the past. In essence, he told them, before you look forward to Jericho, look backward to Jordan and what God accomplished for you there. He said, take 12 men, one man from every tribe, and commend them, saying, take for yourselves 12 stones out of the midst of the Jordan, and those 12 stones Joshua set up in Gilgal as a memorial to the parting of its waters. Joshua 4:2. One of your best weapons against Satan's attacks is a good memory. Don't forget a single one of God's blessings. The psalmist says in Psalm 103, he who forgives all your sins and heals all your diseases, who redeems your life from the pit and crowns you with love and compassion, who satisfies your desires with good things, so that your youth is renewed like the eagles. Create a trophy room in your heart. Each time you experience a victory, place a memory on the shelf. Before you face a challenge, take a quick tour of God's accomplishments on your behalf. Look at all the blessings he has given, all the prayers he has answered. Get a journal, start writing them down every time they happen. In Lamentations 3:21, we read, this I recall to my mind, therefore I have hope. Through the Lord's mercies, we are not consumed, because his compassions fail not. They are new every morning. Great is your faithfulness. And that's our good word for today, part 1, part 2 tomorrow. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
You're listening to CFRN, the Christian Financial Radio Network.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.